Aloha! It's Friday. This is Jamie Barber with Jamie Barber Homes saying Aloha! It's Friday. So, over the last 2 weeks, we've gone over buying your house, selling a house. But this week, we're going to take a little deeper dive into one of the most important parts of all of it is your mortgage, unless you paid cash, and then you don't have one. But so let's look at what's been happening. Based on data compiled by the mortgage industry, mortgage rates have risen since earlier this week. 30-year fixed rates have gone up to 3%. So that's up from like 2.94. 20-year fixed rates are now at 2.75, up from 2.625. 15-year fixed is now 2.25, up from 2.125. Everything's going up. And a 10-year fixed is 2.125, up from 2%. Now, what does all this mean? It means mortgage rates edged on up across all terms since earlier this week, with 30-year rates reaching 3% for the fourth time in the last few weeks. Mike Schneck, chief economist for the Credit Union National Association, recently told us that the raise in mortgage interest rates will be slow and steady in the fourth quarter of 2021. Home buyers should act now to lock in a lower rate ahead of larger increases if you're in the buyer's market. Also, if you're into doing a refi, you want to do a little work on your house or get some money out, mortgage refinance rates rose across the three terms as well earlier this week. While refinance rates remain low overall, this upward trend could be the start of a rate increase that experts have predicted will happen before the year's end. Yep, it will. Homeowners who want to save on interest can swing a higher monthly payment can find a bargain with 10-year refinancing. Rates for this term have held steady at 2.125% for this week. If you're considering refinancing an existing home, check out what refinancing rates look like. 30-year fixed rates, they're 3%, same as straight mortgage. 20-year fixed rates, 2.75, 15, 2.25, and 10-year, 2.125. Not much different than a mortgage. Now, how does the Federal Reserve affect mortgage rates? You may ask. Well, the Federal Reserve System, or the Fed, as it's commonly called, is the United States Central Bank, and it's tasked with taking steps to keep the economy safe, stable, and flexible, especially with things that are happening right now with the debt limit. Luckily, it was. I think we've held it off until December, so we're all good. Consequently, the Fed controls the U.S. money supply and short-term interest rates and sets the Fed funds rate, which is the rate that banks apply when borrowing from each other overnight. The banks have to keep a certain amount of money in their reserves, and so they need to sometimes borrow it from the Fed. But the Fed doesn't actually set mortgage rates. Rather, multiple things that the Fed does influence its mortgage rates. For example, while mortgage rates don't mirror the Fed's fund rate, they do tend to follow it. And if that rate rises, mortgage rates typically rise in tandem. Now, the Fed also buys and sells mortgage-backed securities, or MBSs, a package of similar loans that a major mortgage investor buys and then resells to investors in the bond market. When the Fed buys a lot of mortgage-backed securities, it creates demand in the market, and lenders can make money even if they offer lower mortgage rates. So rates tend to be lower when the Fed is doing a lot of buying, which the Fed has been doing lately to make sure that these interest rates stay low, and during the pandemic that our economy starts to come back up. But the Fed announced that they are going to be doing less of that. So when the Fed buys fewer MBS, demand falls and rates will likely rise, which is what's going to start happening. Similarly, when the Fed raises the Fed fund rate, mortgage rates will also increase. So let's look at the different mortgages that we talked about earlier. The first one is 30-year mortgage rates. Now, like I said, the current mortgage interest rate for a 30-year fixed rate is 3%. This is up from earlier in the week, like we talked about. Now, 30 years is the most common repayment term for mortgages because 30-year mortgages typically give you a lower monthly payment, but they also typically come with higher interest rates, meaning you ultimately pay more interest over the title of the loan, life of the loan, sorry. Now, 20-year mortgage rates. The interest rate for a 20-year fixed rate is 2.750. Again, this is up from earlier in the week. Now, shortening your repayment term by just 10 years can mean you'll get a lower interest rate and pay less total interest over the life of your loan. Now, there's 15-year mortgage rates. Now, like we talked about, the 15-year mortgage rate is currently 2.25. Now, a 15-year mortgage can help you get a lower rate than a 30-year term. You pay less interest over the life of the loan while keeping monthly payments manageable. Now, you're still going to have a little bit higher, but you're going to pay off that loan quicker. Now, 10-year mortgage rates. 10-year mortgage rates are 2.125, the lowest of the mortgages. Although less common than a 30-year and a 15-year mortgage, a 10-year fixed rate mortgage, typically lower interest rate and lifetime interest rate costs are much lower, but it's a much higher monthly payment. Now, how mortgage rates are calculated. Now, changing economic conditions, central bank policy decisions, investor sentiment, and other factors influence the movement of mortgage rates. And the rates typically assume a borrower has a 740 credit score and is borrowing a conventional loan for a single-family home that will be their primary residence. The rates also assume no discount points and a down payment of 20%. Now, how do I choose a mortgage lender? A mortgage is likely the largest debt you're ever going to have in your life, one that will take decades to repay. Or if you got a 10-year mortgage, decade. So it's critical to make sure you choose a mortgage lender and mortgage that works best for your needs and financial situation. Here's some tips that can help you choose a mortgage lender. Comparison shop. Compare rates and terms from multiple lenders. Just as you comparison shop for less important purchases, you should compare offers from several lenders. A Freddie Mac study found that adding just one quote to your mortgage search could save you $1,500 over the life of a loan. Adding 5 could save you about $3,000. Consider a mortgage broker. Mortgage brokers can do the legwork for you when it comes to finding a loan deal. But be aware, mortgage brokers typically make money by charging a small percentage of the loan for their services. And leverage your relationships. Explore mortgage offerings from banks and financial institutions you already do business with. Loyalty and familiarity may work in your favor in negotiating a good mortgage deal. Look for referrals. Ask your friends, family, coworkers, and neighbors for referrals and about their experiences with different lenders. Well, that is a quick download on what is happening in the mortgage market right now. So if you need anything, please don't hesitate to get a hold of me. You can reach me at jamie@jamiebarberhomes.com. I'm happy to help you answer any questions. Also, if you need somebody to help you with either selling your home or buying a home, we're here to help you. That's what we do. All right. Well, this is Jamie Barber from Jamie Barber Homes saying, have a great weekend. And remember, it's Aloha Friday. No work till Monday, unless you're in the real estate market. And then weekends is when we do it all. So you have a great time, and I'll see you next week. Again, this is Jamie Barber at Jamie Barber Homes saying aloha.